Hey guys, what's up? I'm Erin and welcome back to the channel. The headlines look rather scary when it comes to home ownership these days. A survey from the site CraftJack found that 61% of Americans cannot afford to buy a home, and 72% of renters say they'll never be able to afford a home. While those headlines may be scary, what's not scary is taking the time to hit the like and subscribe button because it really does help out the channel. Now, are things really as scary as they sound? To say that 2023 has been a really tough market when it comes to housing affordability might be an understatement. In the past 3 years alone, the median price of a home sold in the US has gone up about 34%. And in that same time, mortgage rates have gone from roughly 2.5% to over 7%. We haven't seen mortgage rates like this in over 20 years. And for an entirely new generation of home buyers, they've never seen mortgage rates like this. But if we zoom out over, say, a 40-year time span, from a historical standpoint, mortgage rates do actually look relatively low still. But talking about mortgage rates from a historical perspective doesn't really do much when people feel like they can't afford a home today. And then we also have to consider those skyrocketing home prices. The average cost of a home back in 1980 was about $64,000, and the median household income at the time was about $21,000. Whereas today, the average cost of a home is about $431,000, and the median household income is about $75,000. In 1980, the home-to-income ratio was about 3. Today, that same ratio is nearly 6. So the ratio of affordability really has gone downhill quite dramatically. Graham Stephan recently did a wonderful in-depth dive going over a comparative analysis between buying a home and renting a home across the country and found that in our present market, in most places, it's actually more affordable to rent than it is to buy. So if you're at all curious, I will link that video down below. So what does that mean? Is buying a house really out of the question for most people? If you haven't yet bought a home, have you basically missed the boat? Well, recently, Zillow has found that younger generations are finding a way to afford housing through house hacking, with just over half of Gen Z and millennials saying that they're interested in house hacking as a way to successfully afford a home. And house hacking simply refers to the practice of renting out a portion of your home or an entire unit for an additional stream of income. Some people buy a duplex and rent out that other unit, and for other people, it's just renting out a room in your home. This is not necessarily a new concept. It's been around for ages. But just like with most things, the younger generation is putting a cool new term on it. It's not a low savings rate, it's soft savings. It's not the envelope system, it's cash stuffing. It's not a roommate, it's house hacking. I grew up watching the show The Golden Girls, and I had a group of friends that we would all watch this together in college. We actually loved it so much that one year we went as the Golden Girls for Halloween. I was Rose. I loved that show so much that it was actually my dream to grow up and live out life like the Golden Girls. I had no plans on getting married. I wanted to grow up and rent a house with a bunch of my girlfriends. To this day, my friend Chelsea and I, while we're both married, have a backup plan to live out our old age as Golden Girls should something ever happen to our husbands. Up until recently, I hadn't seen the show in about a decade, but recently I was watching a few episodes and one popped up where they needed a new roof. And between the four of them, they couldn't afford to replace the roof. That's when it dawned on me that these ladies are living together because they're broke. They can't afford to live anywhere else. They're not just living together because they're friends. I totally missed that aspect of it when I was younger, and it did put a little bit of a damper on the show for me, but I still love it. Could house hacking be a way for you to finally get into the housing market? Well, it could if you do it right. And by right, I'm not trying to imply that there's a hack to the hacking, a little bit of an inception moment. I just mean that you want to be smart about it. I'm sure if you're in the housing market right now or you know someone who is, you've probably heard someone say, now's not a good time to buy a house. You want to wait until prices come down. And you've probably even seen headlines predicting a housing market crash. And the unfortunate news for this group of people is that the vast majority of time, housing prices do not come down. The housing market has only declined 6 times in the past 80 years. And as a matter of fact, home prices have actually come down in real terms since last year, but not by much. In fact, Zillow predicts that home prices will continue to increase in the near term by about 3 to 3.5% for the foreseeable future. Now, I'm certainly not trying to get in the game of market predictions, but I just don't think waiting for home prices to come down is a good strategy. And if history has anything to say about it, it's not likely to happen. And heaven forbid, if it actually did and you got in at the peak and then home prices declined in value, you could find yourself underwater with your house, meaning you actually owe more on it than it's actually worth. That's why you want to be so careful when you buy a home and only buy one you can actually afford. Today's interest rates are a huge contributing factor as to why homes are so unaffordable to many people. Let's consider a $400,000 home where you have 20% down. Here your monthly payment would be about $2,600. And if you carried that loan for a full 30 years, you would pay over $500,000 in interest. On the other hand, if you were to take out the exact same loan back when interest rates were around 2.5%, your monthly payment would be about $1,600 a month. And over the course of the life of the loan, you would pay $135,000 in interest. Exact same loan amount, exact same home, but very different situations. Let's say you're trying to keep your housing costs to about 25% of your monthly budget. You would have needed a household income of about $77,000 in order to afford that $400,000 home at a 2.5% interest rate, which is roughly in line with what the median household income is. Nowadays, you would need a household income of nearly $125,000 for that same home. And this is why interest rates are making such headlines. Housing prices have surged, interest rates have surged, but incomes have not followed that same pattern. But here's the thing. We have the tendency to think what's happening today is what's going to happen forever. Let's look at that graph of mortgage interest rates over time again. Just because they're near 7 or 8% today doesn't mean that's where they'll be 5 years down the road. As inflation gets under control, the Fed will be under pressure to lower interest rates, and then mortgage interest rates will fall following suit. If you're in a position where you can buy a home today, go ahead and do it. There's nothing to say that you couldn't refinance down the road when mortgage rates are more favorable. And while home prices are projected to increase over the next couple of years, mortgage interest rates are projected to decline over the next couple of years. US Bank has a home affordability calculator that I will link down below. They break things down into categories based on your income and down payment. The categories they suggest based on price are affordable, stretch, and aggressive. This example is based off a $100,000 income and a 5% down payment. Generally, I don't like the idea of a bank setting your budget when it comes to a home because more often than not, they're going to approve you for more than what I think is ideal. But if you are committed to having a roommate or renting out a portion of your home, maybe you could go beyond that affordable category. Maybe you could go to that stretch category or that aggressive category. And maybe that really could open up a lot of home affordability options if you live in a pricey area. But keep in mind, if you do not have a renter or you don't have a roommate, your budget is going to run incredibly lean. And you could find yourself in a situation where you are house rich and cash poor. So just be very careful here because this can put you in risky territory. This is where house hacking can make a huge impact. If you want to refer to it in the old school way of thinking, that's getting a roommate or it's renting out half of a duplex. Let's say you get that home from the previous example, it's a $400,000 home, and let's say it has 3 bedrooms. You get yourself 1 or 2 roommates. Having a roommate or 2 can go a long way into helping you get the home of your dreams, or at least get started in the housing market. Now, how much you can charge for a room really depends on your home and your location. In my state, it looks like you can rent a room for about $800 a month. Let's say your mortgage is $2,600 a month. You get 2 roommates. They each pay $800 a month. Now your portion is just $1,000 a month. You're slowly building equity in this home. Hopefully the home's value is slowly increasing over time, and hopefully you can refinance down the road and make that payment more affordable. This can be especially attractive when you're younger, and that Zillow survey did say it was Gen Z and millennials who were more likely to consider house hacking as a home affordability option. At this point, you may not have a family, so having a roommate isn't such a big deal. It's important to consider how long you're going to be living in this home, because unless you find a home at a great deal or you make a significant amount of improvements, it's generally said that you want to live in a home for anywhere from 6 to 7 years to make it worthwhile. There are a lot of expenses associated with buying and selling a home. Closing costs are generally 2 to 5% of the home's cost when you're buying the home, and then the commission on selling the home is generally 5 to 6%. So when you're looking at a home that is several hundreds of thousands of dollars, you can see how these percentages would add up really quickly. So if you're moving every couple years, it's generally not worthwhile to buy and sell a home because the transaction costs are so high. It's not unexpected that in that kind of situation, you could actually lose money. So if you're going to buy a home, make sure that you're going to live there for quite some time. If you're house hacking, you still want to save up for the down payment on a home. The general guideline is that you want to save 20% of the home's cost. Putting a sizable down payment down helps to reduce your monthly costs and also helps you avoid PMI. However, PMI is closely tied to your credit score. So if you have a stellar credit, PMI might not be much of an issue. My husband and I did not put 20% down on this home. Our first home, we actually put about 10% down, and our PMI comes out to about $20 a month, so we didn't think it was a big deal. I think putting down 20% on a home is absolutely amazing, but I don't think you have to hit this 20% mark just to get into the market. If you're really itching to buy a home, I think you can do it with 5% or 10% down. I think this is a more realistic benchmark, especially when homes are so high cost right now, assuming you've run the numbers and you can otherwise afford the home going forward, of course. I feel like in today's world, it's already so hard to save up that down payment because life is expensive and you probably already have high housing costs wherever you are. So whatever you can do to make your life a little bit more affordable as you're saving up this down payment, maybe that's taking a roommate on in the apartment you're renting. Maybe that's moving back home with your parents for a little bit. Maybe it's taking on side work or gig work to put a little bit more aside for this down payment. Whatever you can do temporarily to help you boost your down payment, that's a good plan. And on the subject of buying a home and house hacking and how renting out a portion of your home can greatly reduce your housing costs. House hacking can be great, but don't buy a home with someone unless you're married to them. Treat buying a home like a business decision. You don't want to be buying a home with someone you're not committed to. So make sure that you can afford this home on your own accord. Then you can bring in a renter or you can bring in a roommate, and that can help to reduce your housing costs, but don't make them a part owner. Because if that relationship doesn't work out, if they're just a renter, you can ask them to leave. But if they're a part owner, you are still contractually bound to this person. That's a rough situation. There's no doubt about it. Affording a home these days is much harder, but where there's a will, there's a way. If you're determined, you can find a path to home ownership. Maybe you live extra lean, or maybe you take on a side hustle, and this helps you to save up for that down payment. At the end of the day, when you are ready to buy a home, I hope you buy one you're happy with. If you're ready now, then go for it. If you need a little bit more time, take all the time you need. This is not a decision that you rush. I'm 100% on board with house hacking. It can greatly reduce your housing costs. And like I said, when you're younger, when you don't have a family, having a roommate isn't that big of a deal. When you have a family, at that point, you probably don't want a roommate anymore. At that point, maybe having a duplex or a multi-unit situation is a little bit more attractive. But if having a roommate these days reduces your cost of living and helps lay that foundation for you to get into real estate, helps lay the foundation for your financial life, go ahead and do it. What are your thoughts on house hacking? Leave it in a comment down below. I post new videos every single week. If you got anything at all out of this one, please give it a like. If you're new here, please consider subscribing, or if you know of someone who might get something out of this type of content, please consider sharing. I'll see you soon. Bye.